In this presentation, we will discuss the defensive sectors of the U.S. stock market. The U.S. stock market has 11 sectors, and some of those 11 sectors can be considered defensive sectors. So we're going to explain what those entail. We will also look at the benefits in investing in defensive sectors. So what are defensive sectors? So again, some of the 11 sectors of the U.S. stock market can be considered defensive. And those sectors, those defensive sectors, are made up of defensive stocks. So what are defensive stocks? These are stocks that are in sectors that remain stable no matter the overall market. They also can produce consistent dividends and less volatility. They're less erratic than other sectors. Defensive stocks also are commonly regarded as things that we need, and there are always a demand for. Quote unquote, we can't live without these particular kinds of stocks in these sectors. And I'll explain here just a little bit more detail about what those are and some examples of what those are. Defensive stocks are good options in a down or weak economy. So if there's a recession going on, those are typically good investments during a down or weak economy or a recession or a bear market. And also the defensive stocks are needed throughout all phases of the business cycle. What are some pros of defensive stocks? Again, they're less volatile. They can be more stable. You can kind of rely on these stocks. They can be dependable. They can be less risky. They can produce long-term gains. You're not going to get rich necessarily by investing in defensive stocks, but you can get a consistent long-term gain, and it's less stressful because typically they're less volatile and more stable. And again, they can perform better than many other sectors during a recession. Everything has a pro and a con. The cons of defensive stocks: low gains. Usually when you take less risk or invest in something less risky, your reward is not as great. So the propensity to have low gains is there versus another kind of sector or another kind of stock that has high risk, high reward. So low gains, small returns. Can be difficult to time of when to buy these stocks. Usually when you realize that you need some defensive stocks because we're having a recession or a bear market, it's usually too late. So the timing is very difficult of when to buy defensive stocks. And you won't have any sky-high returns. You're going to have low gains, but consistent gains. So if you see that as a con, then that's a con of defensive stocks. So here are the 11 sectors of the U.S. stock market: information technology, industrials, financials, healthcare, energy, communication. Then you have consumer staples, consumer discretionary, real estate, utilities, and materials. Now, as of January 2022, this is what the U.S. stock market was made up of as far as the 11 sectors go. So 28.7% made up of information technology. So as you see, you have different areas to invest in, but some are invested more heavily than others. So what are the 11 sectors of the U.S. stock market as it pertains to defensive sectors? Remember, defensive sectors are part of those 11 sectors, and defensive stocks make up those defensive sectors. As you see here, highlighted in red, those are the three commonly known defensive sectors of the U.S. stock market. So we have healthcare. consumer staples, and utilities. Let's look in more detail at each one of those. Healthcare. Remember, so when you're trying to figure out if something is a defensive sector, defensive stock, one thing that has helped me is ask myself, do we need it? Do I need this to survive or to go day-to-day living? So, of course, we need our health. So some of the stocks you see in the healthcare sector, medical device and equipment manufacturers, also drug companies, pharmaceutical companies, make up the healthcare sector. Because somebody has a chronic disease and they need their medicine, then there's always going to be a demand for it. Or if people are unhealthy or need certain medical equipment or device, there's always going to be a demand for it. Utility sector. Some of the common stocks that you see in the utility sector are gas companies, water companies, and electric companies. Again, we need these particular companies to survive and to have our day-to-day living. So that's how you want to look at defensive sectors. What is it that we need on a day-to-day basis that doesn't change no matter what the market's doing? So utility sector is another example. Then finally, consumer staples sector. This particular sector, things for the household, just think when you go to the grocery store, drugstore, the things you get there typically are lumped in with the consumer staples sector. So food, beverages, hygiene products, anything that you get at the grocery store pretty much, or you need to get by day to day, can be labeled as a consumer staple in the part of the consumer staples sector and be regarded as a defensive stock, defensive sector. Now let's look at investing in defensive sectors. When is a good time to invest in defensive sectors? Well, the fact that it's so consistent, the fact that it's less volatile, a good time to invest in some defensive stocks would be during lean times, bear markets, recessions, because we're still going to need food, we're still going to need beverage, we're still going to need gas and water and electric. So that's a good time to invest in defensive sectors, in defensive stocks. Another reason to consider investing in defensive stocks would be it adds diversification to one's portfolio. You can't be betting on these highly volatile stocks, this startup company with this or this new technology in that information technology sector. You can gamble in a way, but you're not gambling as much if you invest in some of these defensive sectors like healthcare, utilities, and consumer staples. That conservative kind of approach or those conservative defensive sectors can add a lot to one's portfolio. And finally, it gives you ownership, part ownership in products and services that you commonly use. Laundry detergent, your favorite soft drink, your favorite food, your favorite cereal. It's kind of neat to take ownership in products and services that you use a lot. And those are very common. So you can take part in investing in those products, investing in those services that you use quite a bit. So hopefully this presentation has helped you learn more about defensive sectors and defensive stocks that make up those defensive sectors. In future videos, we'll go over the different 11 sectors of the U.S. stock market, and so we could get better and become good at investing. If you like this video, go ahead and hit that subscribe button. If you hadn't already, I appreciate it. Hit that notification bell, and that way you can get all the latest tutorials and updates from this channel. Remember, let's make money work for us. Let's learn how to make money, save money, invest money, and make money work for you. And that way, we can live life on our own terms.